All right, let's start, Jason. What do you got? What do we got this week?
I guess the topic we should get right to is inflation. This is a topic we've been talking about a whole bunch because we're printing a ton of money. Everybody seems to think the hedge against inflation is to buy Bitcoin, or do you put your money into equities? And are we actually going to see things other than homes and education massively inflate? We've seen some anecdotal evidence of this. Tesla increased the price of their cars. Used cars have gone up in price, which is a function of the lack of production of some cars during the pandemic. So there might be a multitude of factors there, but just putting it out there, are we going to face inflation that, goods and services are going to just go through the roof in cost? Or do we have enough efficiency in the system that the average consumer is not going to see massive inflation on the products and services they buy coming out of the pandemic?
Well, isn't the real issue that Chamath says inflation is good because it creates equality, and he thinks 1979 was a great year? I think we should go straight to that.
All right, I was going to tee it up first to give a general discussion of inflation.
Let's go. I think we should go to Chamath to explain his tweet storm, and then I'll respond.
Okay, there we go.
So I think, David, you got unnecessarily emotional and personal. That was not, again, these were things that I've learned from someone who, I will say, without betraying him, is an extremely well-respected person at an extremely well-known institution that basically has helped make a lot of sort of, capital allocators very smart about things and has made people a lot of money. So I was relaying what I learned through him. So let me just relay that again, and I'll just start with this. Whenever you have $1 of income, you can do one of two things with that income. You either consume things, right? So you buy, or you can save and you can put it into investments for the future, right? So consumption and investment. The reality is that most people, so the lower 60% of the income distribution, essentially spends above their income, right? The lowest actually spends at. So $1 earned is $1 spent. And then the middle two, because they have access to credit, $1 earned, they spend about, percentage points more than that. When you get to the richest 20% of the population, they're actually able to save, and they save about 13 cents of every dollar, and they're able to invest in the future. So consumption and investment. The reality is inflation comes through a volume of activity, right? So you as a rich person can go and buy one $100,000 necklace at Tiffany's. It doesn't move the needle for inflation. But when, 200,000 people buy a $1,000 television, that's felt in the economy. It moves. So inflation comes because of gross tonnage of volume. So you need consumption. And by definition, what that does is it pushes consumption into those, that 60 to 80% of people that are not the top 20%. So what it means is that, you have a volume game of people buying things. And when they buy more of those things, inflation goes up. How do they buy more things? They have more income because their propensity is to consume. So then you have to ask yourself, well, where is this incremental income coming from? And all he has observed, which I think is very credible, is we had the supernatural event in the pandemic. We've now started to print trillions of dollars of incremental consumption. And that's going to start to lead to the most simple ways in which consumption manifests in inflation, which is via commodity prices. What does that mean? Let me state it simply. A rich person lives in a well-insulated house, drives an electric car, and eats fish. A less rich person lives in a poorly insulated house, drives an SUV, and eats beef. Beef versus fish, as a simple example, it consumes 20, 30, 50, 100 times more input costs to generate that same pound of protein than a fish does. It's just an example of showing how income distributions and the effects and the consumption patterns of large swaths of people drive different consumption behaviors, which drive inflation. So all he was trying to represent to me was that idea, which is that we have printed trillions of dollars. We are creating artificial levels of consumption. That consumption will actually drive up commodity prices. Commodity prices will actually drive up inflation. Then what he told me was the best analogy, again, it's not perfect, but it rhymes to the history, is what actually happened in the 1970s, which is that by having this sort of boundary condition, you have to ask yourself what will happen if inflation rips higher. And, starting in the late 60s through the 70s, that's kind of what you had, a same kind of boundary condition. Forget the way in which the money got to people. In this case, it was a government check. But in the late 60s and early 70s, we had similar kinds of programs. We had Head Start. We have, AmeriCorps. We had Food Stamps Act. We had the Social Security Act. All of these things were transfer payments. And when you put that much money into the hands of a large swath of people, consumption went up, commodity prices went up, inflation went up. It peaked in 1979, but it also happened that when that happened, the gap between the rich and the poor was the lowest it had ever been. And so I thought that was a really interesting thing to observe.
Okay, Sacks, you were triggered. You were triggered by this.
Well, I wasn't triggered. I just said it was Chamath's worst take ever. And then,
but David, it wasn't my take.
You were triggered.
It wasn't my take.
Wrong
David.
with the take?
No. Okay. Well, let me explain. Let me explain what's wrong with the take. I created a PowerPoint. So,
oh boy.
I pulled a Chamath. No, it's not boring, and Chamath has done it too. So don't even go there.
I'm gonna do email. You guys come and hit me up in the second half.
No, Friedberg. We're gonna keep the Friedberg index high. So go ahead, Sacks. Take us through the PowerPoint. What do you want to explain?
I'll keep this quick. Okay, so I've called the PowerPoint Chamath's worst take ever.
Oh no,
David! It says right at the top of the disclaimer. Here is something I learned today. Why is it my take?
Well, you responded to me then saying that I didn't like facts. So that was your response. So I'm going to show you some facts. Okay. So first of all, let's ask the question, was 1979 a good year? I don't think you can just cherry pick this one number, the Gini index, and say that this was some sort of great year. 1979, a severe recession begins, which ultimately leads to negative 0.3% GDP growth in 1980. The words stagflation, misery index become household terms. We had unemployment of 6% on its way to 7.2% in 1980. We had a 13.3% inflation rate. The prime rate for 30-year mortgage was 11.2%.
Wow.
Good luck trying to buy a house. We had long lines at the gas pump. There was an oil embargo.
I remember
we
it.
had
Do you guys remember the gas pump lines?
I wasn't born yet, but go on.
Yeah, it was crazy.
And then, Jimmy Carter declares a national crisis in confidence. This was the so-called Malaise speech. And he was well on his way to becoming a one-term president. So what this shows is
David,
that,
David,
hold on. Let me just do the takeaway. So the takeaway is that, the Gini index says 1979 was a great year. And, the issue is, the reason it wasn't is because it's a lot easier to make everyone equally poor than equally rich. When the economy does poorly, guess what? The gap shrinks. Then Margaret Thatcher had a great line about this. So long as the gap is smaller, they would rather have the poor be poorer. That's a great video everyone should watch on her last speech to Parliament. Chamath posted this chart showing this was the percentage of wealth held by the top 0.1%. Chamath, we'll go to you next to explain 1, 2, and 3. But let me just point out, look at when else the Gini index was plummeting, the 1930s. The Great Depression did a great job creating relative equality by making everyone poor. So my point is, I understand there are these inequalities, but you know what creates inequality? Economic booms. That's what creates inequality. What we should care about is not just inequality, but economic growth, real wage growth, poverty, how many people are below the poverty line, and concentrations of power. So that's what we should be looking at, not just this Gini coefficient. Let me stop there. I've got other slides, but I'll stop there and let you respond.
Sacks, go back one slide. The 3 points there were just interesting to me. Number one was LBJ and the war on poverty and all those social programs. Number two, and you spoke about this, but I don't think you're doing a full accurate assessment. What Carter's biggest mistake was he stopped the transfer payments because LBJ started them. Nixon continued them. Carter stopped them. And I think it's important to frame...
Explain what transfer payments are for people who don't understand.
Well, it's basically like, there are all kinds of ways to get money into the hands of individuals. We now talk about universal basic income. That's a way of transferring money from the government and from systemic holders of capital to individuals. Food stamps was a way. The Social Security was a way. There's all kinds of different ways. Welfare was a way until Clinton disassembled that. So I think that what we'll never know is what would have happened if Carter hadn't actually stopped those balance of payments. And the key point is about what happened then afterwards in 3. So you had this basically stopping by Carter. He didn't get to reap any of the benefits of it. Reagan comes in and says, you know what, we're going to simplify the tax code. We're going to defund all kinds of stuff, including, for example, all the mental health defunding that he had already done in California that spewed people with mental health disease onto the streets of San Francisco and Los Angeles. And that sort of continued. And then the real cataclysmic change on top of all of this, which sealed the fate of that trend line, happened in point number 3, which is when George Bush in 2001 had this really seminal decision, which is he had the ability to block China from entering the WTO, and instead he let them in. And he traded that for a vote on the Security Council. And when you think about what really happened there, you unleashed 1 billion people willing to do anything at a cheaper, faster, and better rate. You ushered in globalization. You ushered in the gutting of the middle class of America, and you transferred all that wealth creation that could have happened in a more inefficient, but in a balanced way that could have benefited Americans, and you shipped them abroad to China. So I think it's just interesting to note that basically since 1979, we've all been singing from the same playbook. And I think that maybe what we need to do is figure out whether we need to come back to this idea of shifting the balance of payments back into the hands of individual consumers. And all I'm saying is, without making a judgment, is when you look at what Biden has done in the first 60 days, $1.9 trillion of stimulus and a proposed $3 trillion stimulus package, we're not even
infrastructure package.
We're not even 3 months into his presidency, and you forecast that forward, it feels like we're entering an era of spend, spend, spend. And that was an opinion of mine, which I believe is actually fairly accurate. I do think it will drive inflation. I do think it'll drive commodity prices. And I think on balance, I do think it will suppress the wealth creation of the rich. And I do think it will give folks that don't necessarily have investments the ability to make more in real income, which they will spend.
Well, okay, just quickly. So I'm going to begin by agreeing with the part of Chamath's response that I agree with, which is what happened around 2000, 2001, which killed wage growth for the average worker. Chamath is right about that, but it wasn't just George W. Bush. It was a bipartisan disaster. In 2000, Bill Clinton pushes Congress to approve the U.S.-China trade agreement and gave them full access to the WTO. This was basically temporary MFN. And look at what he said. He said, economically, this agreement is the equivalent of a one-way street. It requires China to open its markets to us in new ways. And it turned out to be a one-way street the other way. And then he also said that for the first time, our companies will be able to sell and distribute products in China made by workers here in America without being forced to relocate manufacturing to China. We'll be able to export products without exporting jobs. Well, gee, the exact opposite happened. So, and then what happens in 2001 is Bush makes this situation permanent. He grants what's called permanent normal trade relations, which is basically MFN status in perpetuity to China, granting them full access to our markets. And Chamath is right that devastated the average worker because all of a sudden they're being forced to compete with, foreign labor that's potentially making $2 a day and is not subject to the same labor laws and environmental laws as workers in the U.S. are. So I agree with Chamath about what happened then, but I got to go back and clean up this view of what happened between 1980 and 2000, because that's where I think we have this disagreement. Let's
talk about the China thing for a second. We made a mistake there. We got hoodwinked. We don't have access to their market. I think it would be good to pause for a second and say, okay, we tried this experiment for 20 years. There was some good that came out of it. Our companies were able to grow and become the dominant players in the world, like Apple, and Amazon, right? We did capture a lot of this value. And a lot of people came out of poverty in China, I guess on the margins. That's a good thing, we can all agree. But it's a communist country, and we basically enabled a communist country to become essentially, our counterparty in running the planet and in our leadership positions on the planet. What do we do now in terms of unwinding this? Is there a way to roll this back, or do we just mute it from this point forward? And how does it become a two-way street, or is that just not even possible, as we've seen with the NBA and some other companies, Twitter, Google, just not being allowed to even operate in China?
Who's we? America? The United States?
The United States. I mean,
U.S. citizens, U.S. companies, global companies. I mean, I think that the challenge
all
is
your
framework, right?
Guys, I think there's one big thing you're forgetting in 2001, which is I think that Bush actually traded away access to the WTO so that they could guarantee China's vote when he wanted to go to war with Iraq, which happened in 2003.
Okay, well,
two dumb decisions that got worse by being put together.
All I'm saying is it was a trade. It was a trade. He traded access to the WTO in return for their support for a UN resolution to go to war with Iraq.
Look, Chamath, you said that I was defending the Republican point of view. I'm not. I'll be the first to say that George W. Bush his presidency was a disaster. I think it'll go down as one of the worst. He got us into all these stupid foreign wars in the Middle East. He began them. I think the decisions with China were a mistake. So I certainly don't want to defend that. And by the same token, I think the Clinton years were generally great years in America. So this is not a partisan analysis on my part.
What do you think, though, about the China concept here and how we would go forward? And what's the path forward with China?
I mean, again, I think it comes down to your objective and who are you solving for. Who should we
solve for? Democracy, the human species?
Well, I mean, I feel like the point of view that, one government is innately better than another is being tested and proven right and wrong every day right now. And I'm not sure that it's fair to say that just because the form of government that the Chinese have kind of adopted and used to govern their country and their people is innately wrong. There's certainly things that are innately wrong in many democracies and that are innately wrong in many non-democratic republics. And so I'm not sure it's fair to just say that, that's really the objective is let's get rid of that communism. I mean, that was an easy kind of simple, check that you could use a few decades ago as a way to kind of rally everyone emotionally towards some cause. But I think there's a lot of businesses today that operate effectively in their own kind of geopolitical cloud. And it's a little bit of a kind of misstatement to think that an American company is an American company. It's not that American, quote unquote, American companies solely build their stuff and sell their stuff in the United States. Many quote unquote American companies build stuff overseas and sell stuff overseas. And globalization, as much as we might want to kind of poo-poo the effects it's had on the average quote unquote American worker, it really has transformed the way businesses operate with respect to politics and countries. There's what's the book? I can't remember the book, but there's a book that speaks to how a lot of large multinational corporations today effectively have to operate as if they were countries into and unto themselves. And so they have competing interests with respect to what the average American or the American government or the American people might have, even though they might be quote unquote American companies, and there might be some intricate tie. And so I'm not sure it's as simple as we have to quote unquote defeat China. We are so intricately tied to the economy of China, to the workers of China, and vice versa. And I think that it's a much more complicated thing than, here's our 3-point checklist for how do we quote unquote beat China. And that's why it's hard. And that's why I think a lot of smart people have, kind of taken on and been challenged by and failed at trying to resolve a path forward where there's this quote unquote looming enemy that is going to become the global economic power, which strips the American people of their influence around the world. And, that may be kind of the inevitability of the 21st century. I don't think that there's a pretty
dark inevitability.
But I don't know if there's a simple, easy answer. And I don't know if from a business point of view, let's say I'm a company, I'm not sure I necessarily feel the effects of one quote unquote country affecting, having more influence globally with other countries than others. It turns out a lot of businesses have greater influence than a lot of governments. And so, one way to kind of think about the evolution of globalization, and maybe even with respect to kind of the notion of what we've been talking about, decentralization, is that maybe governments themselves become less important in the 21st century. And it's the kind of decentralized online movements and businesses and other kind of entities that perhaps are not as regulated and controlled and owned by governments. And, maybe the big failure of the 21st century will be governments. We'll see.
Chamath, you have thoughts on China?
I'm sorry, that was a bit esoteric, but
no, I think it is an interesting point.
The thing that you're not willing to acknowledge is that even when GDP shrinks, it's like it's shrinking from a base where there's substantive growth year over year. Like the GDP in 1969 when LBJ was president was less than $1 trillion, and the GDP now is like $23.5 trillion. And so it's been nothing essentially but a straight line up. And so, this idea that the inflation causes, the only way that we close the wealth gap is by making everybody poorer is not true. Some people may be getting less rich at the same rate, so they feel poorer. But the idea that you actually become poorer is just not true. It's a feeling that you have, but it's not rooted in fact.
So, Sacks, when you look at the wealth gap, are you concerned about the gap, or are you concerned with, the status of the folks on the bottom and how much their lot in life has gotten better?
Yeah, I mean, I'm concerned with both. Actually, I have a slide on this too.
I would buy this argument, and I've heard this argument from before from people not as smart as David. I would buy this argument if GDP did something other than go up in an absolute straight fucking line.
No, it doesn't. It doesn't. Well, hold on. Let me show GDP in a second. The first thing I want to just cover is that part of the problem with the Gini index is it doesn't fully account for government transfers. This is something I didn't fully know until I researched it after your tweet storm, Chamath. But basically, only 2% of the population. So the publicly reported stats are that 13.5% of the U.S. population lives in poverty. Once you actually take into account all these programs and transfer payments, it's more like 2%. You can see this on this chart on the left here, that the green represents the transfer payments. By the way, I'm not against transfer payments. I think we need a social safety net. I want the social safety net to be as effective as possible. I don't want it to trap people in government dependency. I want it to work. I want it to get people out of poverty and into the opportunity economy. But I absolutely believe we need a social safety net and we need these transfer payments. And you can see that the green bars there make a huge difference in reducing poverty. The Gini index doesn't really take that into account. Well, how do you fund these types of transfer payments? The more of a stronger economy that you have, the more that you have a government, the more that you have an economic boom, the more that you see real wage growth and the ability to fund these programs. Let's go back to, let's just look at GDP for a second. So if you go back to, let's go back to this period, 82 to 2000, I call this the Reagan-Clinton boom. I see this as a relatively bipartisan period where under Reagan and Clinton, you had GDP growth of almost 4% compared to the usual 2.5%. By the way, this is why Reagan and Clinton left office with huge approval numbers despite scandals. Remember, Reagan had Iran-Contra, Clinton had Lewinsky. None of that mattered really in the eyes of the American people because the economy was so strong. And you can see that here. And by the way, it hasn't been this strong in the 2000s. We've never really gotten back to this type of economy, since 2009.
Is that because of the economic boom of the PC and internet eras? What would we attribute it to?
The technology boom has a huge impact, but let me just describe what started it, okay? What happened in 1981? Reagan's inaugurated as president in January of 1981. He cuts the top marginal income tax rate from 70 to 50%. And I would say equally important, you had Paul Volcker at the Fed. He breaks inflation. He jacks up interest rates, causes a very severe recession in 1982, but it broke the back of hyperinflation and it ushered in decades of declining interest rates. You can see that on this chart here. Interest rates have more or less been in the decline since Paul Volcker was at the Fed. What does this do? It made it reduced the risk-free rate of return, which leads to more investment in everything. In everything. It leads to more investment. It caused a rally in the bond market and the stock market.
And by the way, no one remembers in a modern era, I'm sorry, Sacks, but like most interest rates for buying a home, mortgage rates were over 6.5% for most of the
it was 15%.
Most of the last couple of decades. Yeah.
Good luck buying a home in the 1970s,
David,
right? Like
David, can you actually be intellectually honest and overlay aggregate actual GDP on this chart? Because what you'll see is it goes up and to the right, independent of all of this bullshit.
No, that's not true. You can see
that is absolutely true. And I'll just can I share my screen now?
GDP growth rate versus
this is GDP growth rate. Forget growth rate. What is the actual number?
Right. We're talking about the real number, not the percentage growth. Because I was actually about to ask
the real number,
this
guys.
Is a change.
This is grade two. I know.
Right, this is a change in GDP.
I know. I'm talking about grade 2 mathematics here, guys. The absolute number.
The absolute number keeps going up and to the right because
no, it doesn't. These dots that are below zero are recessions,
right? But those
in which
are very
GDP actually shrinks.
Those are changes from the year before. So when you're compounding naturally,
no. The green and red bars at the very bottom are changes from the year before, but these are absolute percentage changes in GDP.
I know. So
a recession is defined as 2 quarters of negative growth. So GDP can go down.
Yes.
David, can I just show you the aggregate GDP growth from 1960 to 2000? And you can just look at this and tell me what is wrong with the trading economics website that everybody else would use.
Yeah, pull it up. I mean, I think one of the things that I have as a question for everybody is there a major difference between 2%, 2.5%, 3% growth in terms of how we all experience our lives? And what are we optimizing there for? Are we optimizing for consistency, or are we no recessions?
Well, this is what's interesting. So do you see this chart right here?
It's perfectly consistent with the exception of the
aggregate
crisis.
GDP. Okay. Yeah. It started off at less than $1 trillion in 1950 something. It was about, $1 trillion at 1968, and it's about $23 trillion now. This is the aggregate of what has happened in the American economy over the last 70 years.
Compounding interest is an amazing thing.
Now, exactly right. Now, this has happened in Democratic presidencies, Republican presidencies, when rates were at 16%, when rates were at 0%. So all I'm saying is we have a natural tendency and inertia to move forward. The rate of change, we can debate. And obviously it has ebbed and flowed over years. But the fact that it's towards moving forward and downhill with increasing momentum is undeniable. And so again, I would ask, when we think about the fact that the natural tendency is that the next 5 or 10 year period in aggregate will become bigger and better, there'll be more of the pie to share. Why is inflation a bad thing? Because all it does is depress financial assets. It drives up earnings and income, which drives up consumption of the lower 3 or 4 quartiles lower 3 quartiles of the earnings population. I just don't see why it's such a bad thing.
I think mild inflation, in the 2 to 4% range is fine, and it's probably better. It's certainly better, I would say, than 2 to 4% deflation. But when you start to get runaway inflation like we did in the 1970s, it massively increases interest rates, and that makes it harder for people to buy houses and borrow money and invest money because now the risk-free rate of return is higher, and that leads to
only
stagflation.
Applies. I know, but that only applies to the top quartile of the population. The bottom 3 quartiles don't give a shit about what you just said because they don't do it.
I don't think people want to have to spend $600 on a loaf of bread. That's it. Look, you look at Venezuela, you look at Weimar Germany. You do not want inflation to get out of control, and it can spiral out of control because once people start to expect.
Is that realistic though, that it will spiral out of control given technological advances, efficiency? I mean, that's the backdrop that all against.
You are bringing up, I think, the really brilliant point, which is, could it really even happen today? Because if you think about where we allocate our time and attention and consumption, half of it, by definition, are in things that are just so naturally deflationary. We're all, we're on YouTube, Facebook, TikTok all the time. Those are naturally deflationary sinks of time and energy and effort and money. Right. So to Jason's point, I think that that's actually true. I don't think that it's even possible to actually have hyperinflation anymore.
Where do we have hyperinflation? NFTs, Bitcoin, equities, and homes.
Financial assets.
And homes. Right. I mean, and that's a highly regulated, and I guess healthcare and higher education. Those, but
pretty much anything that the government's involved in.
Basically, the government's not involved in NFTs and Bitcoin. Those are the anti-government portfolio. But
by the way, healthcare inflation really started in Obama because of Obamacare.
Yeah, anything that the government's involved in inflates.
Yeah, because if the government's paying the bill, why wouldn't you raise prices?
Well, there's no competitive market. There's one customer, charge whatever you want, etc.
So Chamath, to be clear, inflation is not my number one concern right now. I'm just saying that it would not be a good thing to let it get out of control. That's all. But it's not the biggest concern on my list.
Your main concern is dunking on Chamath for that tweet storm.
No, I'm not dunking on him. He dunked on me saying that,
it's basically turned into a bunch of 15-year-old girls who said something and got misinterpreted on social media. And now we have to work it out.
No. I'll tell you
Friday, and you, the audience, are the beneficiaries.
No, I'll tell you my main concern is this idea that economic booms are not a good thing because, God forbid, the people at the top